Ethereum, it's dead. Layer 2's also dead, except for maybe like 10 users. Solana, a casino. Tron, also a casino. Cardano, GoFundMe for Charles Hoskinson. Dot, the burn money chain. Sui, hashtag grant. Phantom, Winsonic. Bitcoin, I'm not even going to get started on that one. That's basically the current landscape of the crypto market right now. We have been in a chop for, I don't know, like 6 months and maybe 5 months, and the market is definitely feeling it. It's a big time PvP battle, and if you take a look at Bitcoin, it actually really hasn't done anything. We've literally just been in a chop range. And the crazy part is, last week we wicked down to like, what is that, 54, 55? And the timeline was like dead. Like it was pretty bearish. And even now with kind of like the price run up and the strength in the market, there are some alts and meme coins getting some bounces, but the timeline is just absolutely dead on Twitter, which leads me to believe that we are going into this disbelief stage. We've either already wicked to the bottom or we have yet to hit that. 48K or that 47 something wick could have been our bottom, but we may also see another one. For me, what I think is we have at least one more shakeout. I do think we've already seen the lows on Bitcoin with the 47 to 48K. There are a lot of people calling for like 43 to 44K. Obviously, time will tell. We'll see what happens on that. But this is what I say. If you have no exposure, this is the time to start to dollar cost average into some of these different tokens. Yes, you can start to look at some of the altcoins as well. Bitcoin dominance has been showing strength, and it's currently around 57 to 58 on the dominance scale, which in my opinion, I think we're going to top out around 60. Now, we don't have to reach that 60. That's why I think it's a good time to start to DCA into some of these other alts, because I do believe a lot of them have bottomed. But as for the state of the market, even with the rally, it is absolutely dead. We've actually had some pretty bullish news. We have Elon Musk literally bull posting Doge, and Doge is doing nothing. I mean, sure, it's up like 2 or 3%, but that gives you the state of the market. It's like no retail interest whatsoever. This basically sums up how retail is right now. I'm so bullish, buy the dip, buy the dip. I told you, buy the dip, buy the dip. And now everyone's literally just taking a mental health break. A lot of people are just like, okay, I'm done. We're all just getting chopped up, especially a lot of people that have been leverage trading. Do not leverage trade. This is a spot only market. Why? Because if you leverage trade, you're going to get absolutely roasted. If you do have to feel something and you do have to leverage trade, there is one protocol that you can use that you can actually farm and get some airdrop, which is on Hyperliquid. And this is just basically based on volume. But really, guys, do not leverage trade. If you are going to need to do something and feel something with this, this is like 0.0001% of the port. So if you have $100 to invest, 10 cents is what you're going to leverage trade with, because you're just going to get absolutely roasted. Even when you make some money, the market's going to turn the other way, and then it's going to eventually take it all back. That's how leverage trading works. And of course, how can I forget the most bullish news of them all? Jim Cramer turns bearish on Bitcoin. But if you take a look at the ETF flows, I mean, ETH ETF is basically just absolutely dead. The Bitcoin ETF flows, this is mainly what's kind of driving the market. When the ETF flows on Bitcoin are positive, the market actually climbs. Like, it climbs pretty hard. And if it is not positive, then obviously it declines a little bit, but it's actually not too bad. Like yesterday, we had a decline of 43 mil, or an outflow of 43 mil in Bitcoin. Not 43 million Bitcoin, but in Bitcoin. And you can see here we're actually holding pretty well. In fact, yesterday we kind of grinded up a little bit. So I do think as soon as we start seeing a lot of more of the positive ETF flows, this will actually be extremely bullish on the market. So just based on this and the signs that I'm seeing, it seems like all, if not all, then almost all of the sellers have sold all their coin. Yeah, sometimes when you get to certain prices, the sellers do end up finding some more coins, but I do think we are a whole lot closer towards the bottom than we are to the blow off euphoric top. That's why I say this is the time to DCA, don't leverage, and go with some spot. And it's the same thing in DeFi land right now. It is literally just an absolute PvP chop from people just rotating to different chains like Scroll and Linea to farm the airdrop and then farming airdrops on Hyperliquid. I do have some airdrop videos if you guys want to check those out. Those are in the previous videos I've made. But basically, to sum up this whole entire video, I feel like we are at this stage right here in disbelief. And the reason I believe that is because the market, they don't even believe like it's going up and there's just nobody there. Everyone is literally taking a quote unquote mental health break. Now is your time to look for some of those alts, look for those cult meme coins and dollar cost average into some of these positions. Stay away from leverage. If you guys want to see what I'm doing in the markets and what I'm accumulating, there's a link in the description below that will take you to the premium Discord. Tell me where you guys are watching this from. Drop it in the comments below, and let's go and hit you guys with a wisdom one-liner. We're in Proverbs chapter 16, verses 11. Honest scales and balances belong to the Lord. All his weights in the bag are of his making. Be good, be righteous, be honest. Peace. Oh, and of course, one other thing I forgot to mention. So the Fed, we'll see what happens, but they're supposed to be meeting next week. Going to be lowering interest rates, and you know what they say about the Fed. Don't fight the Fed. Sometimes going into that, usually on the first rate hike, the market drops. But again, when you zoom out, they always say, don't fight the Fed. It was the same thing when they rose interest rates. That was the time to get out. When they decrease interest rates, that was the time to get in. Remember that in the back of your head. Look for the dips as buying opportunities. Peace.